All right, we are live. Welcome to Studio Day, B. How you doing today, man?
All right, man. All is good.
All is good. Oh, man. We want to thank you guys for joining us today for By the Block with Bryan Chavis. We've got a great episode in store for you today. If you're interested in selling your properties or you're looking to acquire, we're going to be talking about why asset managers make hold and sell recommendations and why it's important to be a part of that process. So we hope that you guys listen in and you enjoy this. Before we get started, we want to thank our sponsors, Home Depot Pro, Rent-A-Meter, Bryan Chavis Coaching and Consulting, Buy, Rent, and Profit Education. The list goes on and on.
Allison's Alligator.
We want to thank, all of our sponsors for being a part of the podcast. But today we want to get into asset management and, positioning properties for disposition. So we've talked a lot about asset managers and their position in the acquisitions, why they should be a part of it. But there's also the exit strategy. And so, B, in your opinion, why should an asset manager be a part of the exit strategy? And after that, we're going to get into 6 ways that, they make hold and sells.
Yeah. Well, I mean, technically, if you're a part of the acquisition, you probably need to be a part of the disposition as well, the sell.
Okay. Yeah.
So, if you're going to be a part of the front end, you should be a part of the back end, because it's a full cycle. It's a cycle.
Yeah.
So, and the asset manager is in charge, as we've talked and used all these analogies in the previous podcast. But for those who are maybe first-time listeners, the asset manager is more like pit crew boss, spotter up, if you're talking NASCAR or Indy,
of course.
The spotter that's way up in the stands that, can see the entire track and see all the dangers ahead. Pit crew boss understands what to change based on what's going on with the vehicle, how to make these changes during mid race, right? So that's what an asset manager is. So if an asset manager is that, then obviously they're going to be the best to really understand when it's time to sell.
Okay.
Because the trick is, you have an idea of when, your hold period is going to be, but sometimes, due to economic circumstances, changes in, like in rates and you could have, negative downward pressure with inflation. And,
right. Okay.
There's a lot of things there can be some changes in, to certain municipalities that cause, the area to be less desirable, maybe to invest in. It's time to pull out of those areas and reinvest elsewhere. Right. There's a project that, guys were doing that, they were doing the project in somewhere in New Jersey, and they decided to pull out and start focusing on Austin, Texas, and certain areas within the Sun Belt.
Right.
So sometimes your strategy changes. It's like, let's get rid of this property. Let's see, when we can sell it. And you might have been thinking about holding it for 7 years.
Right.
But, in year 4, you might think that there's a greater opportunity elsewhere. We need access to capital. What can we sell?
Yeah.
And so when you say, well, what can we sell? What can we fire sell? What can we get rid of? So we can move, our strategy to a different area, geographical area. The who you're going to consult is the asset manager.
Right.
What does this particular subject property A look like?
Okay.
Can we sell? What would be the value? And then, there's 6 different things that, typically there's more than 6, but there's 6 keys that an individual that, is going to look at, our asset manager is going to bring to the table to the ownership team. And they're going to say, hey, look, let's evaluate these 6 topics and make our decision.
Right. Oh, so this is part of our coaching program within Buy, Rent, and Profit Education. So this is a small section of our asset management course.
Very small section, right? Yeah.
And so it's called 6 Ways Asset Managers Make Hold and Sell Recommendations. And I would love for you to kind of take us through this, in your own words. So one is identification of the linkages between hold and sell recommendations and budgeting decisions. So identifying the link between, recommendations and budgeting decisions. Why is that something that, asset managers are doing?
Yeah, it's extracting real life data.
Got it.
And, when you say budgets or budgeting, you're talking about the asset management plan. Again, in the previous podcast, when you talk about an asset management plan, 60 to 40% of the asset management plan, depending on the type of company you work for. Sometimes it's 60%, but the management plan, 60% budget driven.
Right.
Sometimes it's 40% budget driven, depending on who you work for. Right. But the bottom line, the budget makes up a major portion of day-to-day operations, or has an influence over day-to-day operations. So being able to connect the dots between a possible exit strategy and where we are currently, this information is relied upon to make those decisions.
Wow. And so the second one is calculating estimated returns on investments at different exit points. What does that mean, different exit points? What are we looking at when we're looking at the different types of exit points?
Well, it depends on the company. So, it could be that's a broad question.
Right.
How it was interpreted to me when I came up in the industry. Different exit points really means different values.
Okay.
So you can say, hey, look, I have a $5 million property. If it exited at a 4 cap, what would the value be? If it exited at a 3 cap, what would the value be? If it exited at a 2 cap, what would the value be? So different exit points is different values.
Okay.
Different placements of value.
Okay.
So again, it's basically kind of really understanding where you are in the market. And that's difficult because, you might see similar product trading at a 4 cap, and you really want it to trade at a 3.5, and I'm just throwing out numbers. But, you're looking at a variance of I don't know, because I'm not good at math, but you're looking at hundreds and hundreds of thousands of dollars in difference and variance and difference between a 3.5 and a 4 cap.
Yeah.
So you're obviously looking at more value at a 3.5 than you are at a 4 cap rate.
Yeah.
So different exit points and understanding where you're going to exit the project and where you currently are. And then also at the pro forma.
Okay.
So where are we currently with the rents? How much do you think we can get? Are we below? Are we above market? Is there more meat on that bone?
Right. Okay.
If there's more meat on the bone, then you can project that 3.5 out a little bit easier, as an exit cap. If you're at the max, like me at Park Plaza, I feel like I'm at the max. I'm setting. we're red meter. We're revving in the red. You're at the highest point.
Yeah.
Can you get more than 1,500 for 400 square feet of a studio apartment in the heart of downtown St. Pete? Right this moment,
not really.
Nah, you're at the max. So in my opinion, pro forma that out.
Okay.
With a aggressive rent growth strategy, and projecting a lower cap rate, a 3.1, 3.2 cap rate is probably unrealistic. So as a strategy, so it's different strategy points, stress testing different scenarios. Your brokers, your lenders are going to have an influence on that, but typically you're going to already know, your asset manager is already going to give you that, and you'll know what most lenders, Fannie Mae, Freddie Mac, most of those GSE government-sponsored entities are going to say, hey, look, this is what we're underwriting. This is how we're under. So you might have your own exit strategy. And trust me, they have their own. We're going to bring Chad Musgrove in here, and he's going to explain a lot of, they have a different lens that they look at.
Right.
When it comes to value. So you're going to have to really strongly always in your management plan, you always have to have a focus on what the next buyer is going to inherit from you.
No, that makes sense. The third way that asset managers make hold and sell recommendations is by the accounts describing the consistency of a hold and sell recommendation with the underlying investment strategy. So I was just curious, what does that mean to you when thinking about that?
Yeah, when you're talking about a narrative or when you're talking about accounts in general, you're typically talking about, just the flows of income.
Okay.
So, and typically when you're talking about accounts, you're talking about charts of accounts. So, you're looking at the balance sheet.
Yeah.
And so making recommendations, again, almost like you're forecasting, as we talked about those rents, you're also forecasting expense loads. So you're not only forecasting expenses and income and through rents, but you're also forecasting income through laundry, income, parking income, the various different other income. Typically when you're talking about a pro forma statement, there's other income. What is that other income? Usually typically laundry, parking, if there's a gym access charge, gym access, whatever extra income the property can generate. And then projecting operating expense loads and looking at those accounts and understanding where those are going to be in year 2. So just giving a basic understanding. Again, it's preparing the property for the disposition. You're really preparing the property for sale. You're really, I guess a good way for the listeners and the viewers to understand, you're really preparing a budget, management plan, underwriting, however you want to look at it, for the buyer.
Yeah.
This is Park Plaza. This is how this particular property operates. This is why we say the value is X.
Absolutely.
And then the lender looks at it and says, agree, disagree, make changes here, based on our lens that we're looking through. You're going to have to make subsequent changes for value if you want this particular loan or that particular loan. Yeah. It's getting more and more competitive. There's so many different loans. People are getting creative with doing certain bridge and hard money loans with certain assets. So even if, a government sponsored entity or Fannie Mae or Freddie Mac says no, there's so many different other shops out there that are allowing for, underwriting with sometimes even subpar financials, and a very subpar business plan. So there's opportunities, but the original idea of understanding the narrative of accounts is really describing, the consistency or inconsistency in the actual net operating income, the flow.
Okay. I mean, you can see now the challenges. So it seems like the acquisitions person is now out of the picture and it's left to the asset manager.
Oh yeah, they've been left. They've been done.
So I can see, as we've been talking about how important it is for them to even be at the table in the front end.
They're done as soon as you close.
And now you're responsible for delivering all these results.
That's right.
So that makes sense. So number 4 is making unique hold and sell recommendations over the short, medium, and long term. What happens in those different recommendations? Why are we making these multiple recommendations? Should we hold within short term, medium, long term, or should we sell? What does the asset manager have to do with that?
Well, again, everything. Yeah. Because when you're talking about different timelines within the project, you're always having to understand where the project is currently and what you're pro forma and where you're projecting. So where your rents are currently, where your operating expenses are currently, what you're projecting, what you can realistically project. All of this has to come from data, real life data that goes on day to day. So property manager is going to send those up. Asset managers has been scrutinizing those. Yeah. Right. They're scrutinizing reporting every week. Right. Through their Monday morning dashboard reports. Right. Yeah. We already talked about that. That typically encompasses rent rolls. Typically encompass delinquencies, renewals, maintenance logs, maintenance service requests, traffic. Right. And when I mean traffic, meaning the amount of leads you get on vacant units, when they were leased, how long they've been sitting on the market. You're reviewing all these reports and making decisions based on that. Then at a quarterly, or on the end of the month, it's accounting month end. Right. AME. Then you're looking at all these reports, gathering these reports, checking the balances, looking at your dashboard, making sure everything is running smoothly. Okay. So you're always having your finger as an asset manager on the pulse of the way this property is operating according to the management plan. Got it. So different data points, you're extracting maybe an exit strategy. You might be looking to do a rehab. There's always something you need to be able to look at the current data points. Right. So it's also about extracting, what, we'll do a deeper dive into that, but what actually encompasses those decisions. What is an asset manager really looking at? What reports are they looking at, and doing a deep dive to be able to make these recommendations as well. But that's a different topic that we'll cover. But that's kind of the whole premise of the 6 different ways an asset manager makes buy and hold recommendations is really encompasses what we've been drilling home. True. Is setting up a management plan. And having the reporting on a weekly, monthly, quarterly basis to be able to make educated decisions. Not, we're going to sell I've had the property for 4 years. I think it's time to sell for whatever circumstances. Let's start pulling the reports. Let's start looking at the T12s and the T3s. Let's start preparing the property for sale. Properties should be prepared for sale.
Yeah.
The day you buy it. You should be preparing for sale the day you buy it. If that makes sense.
That makes perfect sense. I mean, I'm thinking about this as people are listening. You may own, a single family home, or you own your own units, but as you're looking to get into more sophisticated things like syndications, this is an ongoing process, and you want to show, maximum returns and how you've gone full cycle. And so this becomes more and more important.
Full cycle.
Yeah, that there's a consistency here. So it's not like we're just holding our own properties and we have a hunch. You have obligation to your investors. You're looking to attract new investors. So you want to show that,
See, that's the thing too, Nate, is a lot of folks talk about the fun stuff, the buying.
Yeah.
But when you buy, you should be prepared to sell the next day. Your focus is bringing that value so you can sell the next day. You sell by operating the property correctly, getting the most out of the value. So the focus should be, day one when we acquire management plans in place, you're focusing on the overall goal is the end game.
Right.
Full cycle is to sell the property.
Right.
At a hopefully at a huge profit.
Yeah.
So
absolutely.
So yeah.
That makes sense. Yeah, I think I guess for me as well is just saying, if you're thinking about this and if this was your first investment, this is something that hopefully you're going to be doing for the next 30 years, 10, 20, 30 years. And so, it's not just one time, like you said, it's full cycle.
Each property is full cycle, and not a lot of people talk about the full cycle.
Right,
it's the buying cycle that everybody loves and talks about. Books are written about, and people, only property managers go to the chats or the Facebook groups talking about the day-to-day operations, and that's got to change. The owners and operators, unless you're a limited partner.
Yeah.
But if you're a general partner, you're in charge. You're listening to this, and you're probably a general partner. You're probably. If it's a smaller partnership and not a syndication, it's between a couple of buddies, technically still a syndication. But if you're doing it at a smaller level, you're an operator, you're running the show, you're listening to this podcast because you want to understand operations. You're a smaller syndication, a larger syndication.
Yeah.
You want to know how to increase your operations, you're listening to this podcast.
Yep.
So really at the end of the day, that's the focus is understanding how to get full cycle.
Yeah, exactly.
Not how to get, not the first leg of the race.
I love it. So I want to interject a little ad break in here. So speaking of going full cycle, if you guys want to learn and really learn how to maximize your investment opportunities, we definitely encourage you guys to visit buyitRentitProfit.com and check out Buy It, Rent It, Profit Education. We've got a wealth of resources for you. Who just swimming through them yesterday, just giddy with excitement. Over 200, presentations, courses, forms, spreadsheets, everything that you could possibly think of.
500 forms and spreadsheets.
500 forms and spreadsheets. It's ridiculous.
Over everything you need to be successful, man. Full cycle.
We shot over full cycle. It is. we shot over 130 videos, for you, and we're continually shooting more and more. So if you're really looking to learn property management, asset management, multifamily investing, you're in the right place. So we want to invite you guys to visit buyitRentitProfit.com. Sign up for our free investing guide, multifamily investing from A to Z, and just get plugged in. And let's get back to the 6 ways that asset managers make hold and sell recommendations. So we're on number 5 now. Formalized recommendations incorporated into annual or quarterly reporting process. And you often say this, that, it's kind of ongoing. What does this mean to you when you think about, making formalized recommendations incorporated into the annual or quarterly reporting process? What are we doing?
And I kind of gave that away, and I apologize.
It's all good.
But that's the Monday morning reports. The Monday morning, then which is your weekly reports. Then your monthly accounting month end.
Yeah.
Then your quarterly reporting. So keeping your finger on the dashboard and your finger on the pulse and keeping your eyes on the dashboard of the property through the management plan, through the reporting. That's what that's about. Wow. Being able to make those recommendations, those moves, and those pivots when needed.
That's interesting. So, I mean, from 3, 5, 7 year hold, every 3 months you're going
pivoting.
Through, wow.
You might pivot 5 times in 1 month.
Wow.
You're constantly pivoting.
It's not set
based on the market. Not set it and forget it. And that's how, again, man.
Yeah.
That's how a lot of this is being presented.
Yes.
It's how a lot of it is being presented in the marketplace. Social media makes everybody look like geniuses. Makes everybody, everybody's taking pictures in front of the properties, out in front of the sign of the property. And, it just makes it look fun. So this is wealth building. And it's yes, it's exciting, but it's work. It's a science.
Yeah.
And it should be respected. It's
Absolutely.
business, and it should be respected as such. So, yeah, man. It's not as easy as it's not that cut and dry, set it and forget it. No, it's always pivoting. You're always focused on the next headwinds to come,
right?
And understanding how to move and adjust and make the proper adjustments. Again, I love the NASCAR and the Indy. You're always making adjustments, depending on the wind and what's going on to the vehicle and its aerodynamics, whether up, down, the tilt of the wings and things, all the tire pressure and fuel consumption and all adjustments, constant adjustments to win the race. And that is multifamily investing. That's asset management at its best, property management operations, day-to-day operations at its best.
Right.
A constant flow of ebbs, constant barrage of changes.
Right.
Just every day.
Yeah.
There's tweaks to keep this thing running at its maximum.
Yeah.
To be competitive, to win the race. There's always constant, and those who make the right type of adjustments, find themselves in the winner's circle at the end of the race. Those who make the wrong type of adjustments, they lose. And sometimes you can, it's just a matter of seconds. And when you're talking about, those races, it's a matter of just small adjustments being made at the right time or not being made at the right time. Can cost you. Yeah. And it's the same thing in multifamily. It's so fluid. It's so you're always constantly pivoting and making changes to the management plan. It is not set in stone.
I love it. So moving on to our final 6 ways, our 6th way. So ad hoc recommendations driven by changing market or property conditions. So you have been a master of looking at demographics and psychographics. So what are we doing with like on the fly recommendations, looking at changing market and property conditions? What type of changing market and property conditions are affecting?
Yeah. So, nothing on the fly.
Yeah.
Everything is data driven. So,
I guess as needed basis.
Basis. And here's the thing, it's always needed.
Yeah.
So, when it's as needed, it's typically because someone at the top wants something.
Right.
But it's the information needs to be there and is always being compiled.
Okay.
So it starts at the very beginning.
Yeah.
The transaction between whoever's leasing the rental unit and the prospect tenant.
Okay.
Coming together.
Right.
And the prospect tenant asking, can I lease this unit? And the leasing agent doing one or two things. Yeah. Just opening up the door, showing the rental unit, or providing a tour and having a script and asking the prospect tenant a series of questions, receiving that data, using the prospect tenant as a consultant, a free consultant, asking them what they like, what they don't like, if they leased, why didn't they lease, can they provide just some feedback, some simple feedback, following up the phone call, then that data being used and pushed forward into the Monday morning reports. So the asset manager has the best content, the best information as possible.
I love it.
To make those decisions on what adjustments do we need to make to the fins on the front of the vehicle. What adjustment needs to be made to the pressure in the tires, fuel consumption. Very hard to make those decisions if you can't read the fuel gauges, if you don't know the tire pressure.
Right.
Or where the drag is coming from on the vehicle.
Right.
Very hard to make any kind of educated decisions. Without having, the proper dashboard. So the information is is, it's so important.
Yeah.
And whether you're a large organization like some of the organizations we've worked for, housing authorities and et cetera, larger private equity firms, right. or a small operator that's doing the leasing themselves. When you lease and you show a rental unit, you need to be doing the same thing. That data needs to be extracted from the prospect tenant, and that data needs to be qualified and scrutinized.
Right.
And so, and then it's used to make decisions and tweaks to the management plan. Qualifying criteria, and it's very simple. Rules and regulations, that's simple. So, what changes need to be happening day to day.
Right.
You'll see a trend, 2 or 3 months of something happening. You're like, okay, wait a minute, that's not an anomaly. This is a trend happening. We might need to make certain changes to the qualifying criteria.
No, that makes sense, man. Wow, thank you for breaking this all down, B. I mean, it's so much, man. This is just a small part of what we teach within BRP education. This is part of our asset management course, which we invite you guys to take a look at. If you go to buyitrenitprofit.com/asset management, you'll be able to get a look at the overall curriculum and sign up to take our course. Before we end this podcast, we want to invite you guys to join us in June. We've got an exciting event that we put together for you guys. It's called Buy It, Rent It, Profit Live. This is a great place for you to come and gain credibility. It's a 2-day event, June 11th and 12th here in Tampa Bay. Go to buyitrenitprofit.com/live. We've got Bryan Chavis, offering this amazing, certification event where you're going to become what was it called? Certified multifamily operator, CMO. So CMO. So you're going to earn your CMO certification, and this will give you more credibility working with investors, more credibility in your market,
working with lenders,
and just give you that edge to really succeed in this industry, give you the knowledge that you need to manage your own properties. So we want to network with you. We hope to meet you in Tampa Bay. We've got a huge guest line of speakers. We've got Chad Musgrove, Fannie Mae, Freddie Mac lender, underwriter, phenomenal talent. We've got syndication attorneys. You name it.
Guys from CBRE speaking on the market, Mentimeter.
Yeah. So, it's just going to be a great event, and we encourage you guys to join us. And then if you guys are interested in, more education, just continually check out buyitrenitprofit.com. This is going to be the place where we continually, just drop resource after resource. And
subscribe if you haven't. Send a friend. Join our Facebook group.
Yep.
You can find it, Buy It, Rent It, Profit.
Investor community.
So, this costs you nothing.
Yeah.
So, join those groups. Start there.
Yeah, exactly.
Start there.
If it's free, it's for me.
That's right.
So, go ahead and sign up for that. We definitely want to see you guys in June Facebook group
and
June.
Facebook. Yeah.
So B, once again, man, thank you so much for joining me in the studio.
Absolutely.
Appreciate all the knowledge. And I look forward to talking with you next week, man.
See you next week, brother.
Take care.